Welcome to FYI, the For-Your Innovation podcast. This show offers an intellectual discussion on technologically enabled disruption, because investing in innovation starts with understanding it. To learn more, visit arc-invest.com.
ARK Invest is a registered investment advisor focused on investing in disruptive innovation. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions. It does not constitute, either explicitly or implicitly, any provision of services or products by ARK. All statements made regarding companies or securities are strictly beliefs and points of view held by ARK or podcast guests, and are not endorsements or recommendations by ARK to buy, sell, or hold any security. Clients of ARK Investment Management may maintain positions in the securities discussed in this podcast.
Welcome to the Bitcoin Brainstorm. Along with my co-host Yassine Almandra, Director of Digital Assets, and Kathy Wood, Founder and CEO and CIO at ARK Invest, I'm your host, Rod Rudy, co-founder of Bitcoin Park, a community-supported campus here in Nashville, Tennessee, focused on grassroots Bitcoin adoption and a home for Bitcoiners to work, learn, collaborate, and build. We are now on episode number 9. And this month is going to be an absolute banger. Each month, we plan to host a different topic and invite amazing people from a variety of areas within the Bitcoin community. And thanks again to the support from Kathy, Yassine, and the ARK team. We're taking our monthly Bitcoin topic-based approach at Bitcoin Park and applying it to a monthly podcast series we are calling Bitcoin Brainstorm. Our aim is simple: drive conversation around Bitcoin. And today we are going to dig deep into the multifaceted world of Bitcoin custody. So we have approximately 60 minutes and we'll be covering a lot as always. Let's do some quick introductions for everyone and just jump right into it. And I'll start first with you, Max Guise, Bitcoin wallet lead at Block.
How's it going? I'm Max, working at Block, leading a team building Bitkey as well as Bitcoin mining hardware systems, and excited to be here with you guys today.
Yeah, nice to have you join us, Max. Tyler Campbell, head of custody support at Unchained Capital.
Hey everybody, Tyler Campbell here from the Bitcoin capital of the US, Austin, Texas. So really glad to be here. I am the VP of custody support at Unchained. Really what that's comprised of is our concierge team, as well as our premium support and frontline support team. So pretty in the weeds, working with clients every day. I've built over 1,000 multisig vaults for individuals and businesses. And so really excited to talk with the group here today about Bitcoin custody.
Did Parker Lewis get to you before this podcast? Because that blasphemy about the Bitcoin capital being in Austin right now is a little bit of fighting words from someone in Nashville. But I digress.
I knew it was going to be a little risky, but I had to throw it in there.
There you go. And also Rob Hamilton, who's here in Nashville, Tennessee, and founder and CEO of Anchor Watch.
Yes, thanks for the introduction. And proud member of Bitcoin Park, working out of Nashville. That's right. Yeah. So we at Anchor Watch, we are a couple of things, primarily insurance, actually, for Bitcoin in custody. And we are able to do this through the building of our own custody technology, which uses more robust Bitcoin native smart contracts for risk distribution and risk mitigation, and then layering in premium insurance to actually do the risk transference side of that arrangement as well.
And you guys just did a deal. Was that right?
We are finalizing with a global top name reinsurance body for us to underwrite our actual custody technology for making sure that you are able to actually have your Bitcoin in safe custody and have it insured and denominated in your name specifically.
Amazing. Great to have you join us, Rob. Going around the horn, NVK, CEO of CoinKite and an investor.
Hey, man, thanks for having me. I've been in Bitcoin since the paper came out, and we've been making Bitcoin hardware since, I think, 2012. And we help OGs, not get robbed with the cold card. We make the memes with the block clocks and, all that good stuff. There's a lot of products out there that we make.
Awesome. Yeah, check it out. And I'm not sure in my background, there's like 16 products of mine from CoinKite I have as well. I call NVK Santa Claus because he just sends us gifts all the time. And Rick Schonberg, head of custody, foundations, and trading at Coinbase.
Yes, hi, Rick Schonberg, also a Nashvilleian indirectly, so my family goes back to Nashville for many generations. So in case that encourages you to throw me softball questions, I'll go with that. I've been at Coinbase a little over 3 years, background in TradFi, spent roughly 30 years in electronification of markets, mostly FX markets, and found my way to crypto, originally to Tagomi, then took a break, unfortunately, but had the good luck to come back. And I've been at Coinbase, where I help run our institutional custody business. We have a foundations team, which sort of is the dark arts and infrastructure that's behind that, and then our institutional trading product.
Nice. I will follow up with you on the Nashville side, but I would extend an invitation whenever you're visiting family. Come by Bitcoin Park. We're in the heart of Hillsborough Village, if you're familiar with that area. So walking distance. We got you. And always Kathy Wood, who's always joining us, founder, CEO, and CIO at ARK Invest. Welcome, Kathy.
Oh, thank you. I'm the lucky one. I get to learn so much. And, every time we've done one of these brainstorms, my confidence level, which was already pretty high, continues to soar. So thank you.
Yeah, absolutely. And maybe I'll start off with you, Kathy, because I do think Bitcoin custody represents a pretty significant paradigm shift. When you think about from these traditional asset custody, particularly in terms of security, accessibility, and transparency. And in doing some research, actually in 2017, you and the ARK team published a white paper with the Coinbase folks on how Bitcoin is a new asset class that doesn't really fit neatly within this traditional asset class categorization. And I think the big part of its uniqueness is around custody. So maybe to kick it off, can you elaborate a little bit more on Bitcoin's uniqueness?
Yeah, well, you're right. We did that paper with Coinbase. I think, Rick, you were in Series B, maybe Series B. It was pretty early on. And we were getting data from Coinbase that we would not have gotten from no one else could have written that paper without Coinbase. So we felt very privileged. And of course, new asset class, low correlation of returns from a financial person's point of view. But it's in launching these Bitcoin ETFs that we've all learned a lot more about custody, especially institutional custody, and have been able to communicate to the financial world. This is not a normal ETF. And one of the biggest considerations from a due diligence point of view is custody. And, you talk about, the traditional world. They don't have to deal with, things like, well, booms and busts and halvings and forks and airdrops and all kinds of things. So, just getting people in our business to understand this is new. This is a new asset class, and don't pretend otherwise. So yeah, I grew up in the traditional world, rules, regulations, legal structure, very strong here in the US relative to elsewhere. But with time, and we certainly have seen this in the regulatory world, there has been more compliance, more onerous regulation over time, a lot of redundancies and inefficiencies that have really slowed down the system. And the idea that with Bitcoin we eliminate all of that, how freeing is that? And the fact that ownership is a function of cryptography, that, this is a digital bearer instrument. How freeing is that? And, I just had a call with our team with a company in Nigeria. And I don't know if you know this, but they had a change in administration. And those people have lost 2/3 of their purchasing power and wealth to the extent they weren't diversified, and were hostage to that legal system. So, and we're seeing more and more devaluations around the world. So this is going to become a bigger and more important topic over time. So I am looking forward to learning from you. I know just about what I've told you.
Yeah, absolutely. Yassine, is there anything else that you wanted to jump in on?
I think to frame this and maybe to open up the conversation, we talk about this a lot within the ARC team, but it's like Bitcoin as a sort of an open source software and the way that it is set up has embedded an independent, property right system in a way that I don't think has ever existed. So when you think about the enforcement of asset ownership in the traditional world, that's often, based on legal structures and local authorities that are enforcing the ownership of those assets. With Bitcoin, the only requirement to deem ownership is possession of a private key. And so when you think about how, you're replacing the local enforcer with private key cryptography, you've effectively introduced an entirely new property system. And so the concept of a digital bearer instrument with Bitcoin as that primary example, I think is a really new paradigm that we think opens up this sort of spectrum of optionality. So perhaps maybe we start with like, what does that, as it pertains to ownership of an asset, what does that create that has never really existed prior to the introduction of Bitcoin?
And Yassine, before we go into the answer for that, one of the reasons I mentioned Nigeria and all of, the domino effect that we are starting to see throughout the world is this idea of property rights. A student of economics, we know that the most effective way to pull people and countries out of poverty is immutable property rights. And so I think the domino effect of currencies falling, I actually think that Bitcoin is playing a role because prices are determined at the margin. And there is, people are voting here for an insurance policy against, against the loss, severe loss of purchasing power and wealth.
Very well said. I don't know, NVK, you've been an OG for this time, like thinking about property rights, a digital bearer asset, and especially building out the custody solution. And then maybe Max and then Tyler. What do you guys think?
1,000 years ago, you buy, if you have some wealth, you buy some paintings, you buy some gold, you stick it in your castle, and then when somebody else is having war near you, you take the paintings, you take the gold, you put in your carriage, and you run to a family place, right? You wait for the war to be done, and then you go back to your castle, you make a claim or whatever, and you put the painting back on the wall, you put the gold back in the bottom, right? And you're like, life continues, right? It might be a couple generations later, but it was possible to transport wealth without permission. As like money and financial worlds sort of like evolved, we gain a lot of velocity, right? When capital velocity can move the money, you can do things with it, but we lost the capacity of having no permission, right? Like we lost all control over capital. And what Bitcoin did is it created this way where the money is in your head, the money is in the computer, right? With those 12 words, you can take your wealth again, even as a completely bottom of the pyramid person, and move. You can go anywhere. And with this new capacity, comes a lot of responsibility, and that sort of like touches on the risk and how to mitigate risk. And like that's what we do with hardware wallets. That's what people do with an enterprise solution. And we're relearning how to do self custody again. Do the old bailment. Get back to this world where entities have full control over their wealth, that be companies or individuals, right? Mitigate that risk, and sort of like move forward, because governments are not going to just let that go too, right? That there is the permission, and we're really arriving at a point now where the law and math don't agree, right? Like you can have your wonderful, you can have 1,000 Bitcoin sitting in your cold card, and you leave it to your wife, but now, maybe there is another family claim on that. Even though she has the keys, she may not have a legal title over that inheritance. And the world's going to get very complicated. And I think we're all sort of getting to that now that Bitcoin is worth a little bit more. On how do we solve these problems for people who are in very different situations, right? Is the African person? Is it this like a New York person? Is this a family office? Is this a corporation? And sort of like, how do we transverse this world?
Yeah, and I think, Max, you're solving it a different way as well, but I don't know if you wanted to jump in.
Yeah, I think one thing I'd love to echo here is that MVK touched on is that custody has become the default, where people actually have access to custodial systems. Like that's what they go to first. And it means that they just give up control. Somebody else has control. Somebody else makes the rules. They decide, when you can have access to your money, who you can move it to, how much, when. And what we're really after is, of course, flipping that norm. So what we see today is, people, when they start off, they need to go get Bitcoin, and they tend to do that by moving between a local currency and Bitcoin. That means they start with an exchange. Then they tend to start with an exchange wallet, and they tend to fall into this default pattern that doesn't put them in control. And what we're trying to build is more accessible tools so that can actually self-custody, and a self-custody Bitcoin wallet, like Bitkey, for example, can be the place that people start their journey.
And I will say Bitcoin is for anyone. And as we're moving up the stack, I think we go into the Unchained and the Coinbase world, which are attacking it a couple different ways. I don't know if Tyler, if you wanted to jump in.
Yeah, of course. No, something that Kathy said was immutable property rights. And what I like to do is, take that line and then underscore it with a 21 million supply hard cap, right? So you have immutable property rights over your portion of 21 million. That becomes incredibly powerful. And then further underscored with open source compatibility for cryptographic principles and private keys, right? It's quite amazing. I mean, working with individuals every day that I can tell them, your 12 words that you generated maybe from a particular hardware wallet can be imported into a cold card and brought to life again into a different device entirely, because these things just work. I do think it's, to Max's point, a lot of folks, it's education at the end of the day, but it's a lot of folks treating that exchange as their final resting place for their Bitcoin, without knowing that there's a wonderful world to expand into. And that's really what we're trying to do at Unchained is educate around that, right? We're living in a world now where no single company should be able to lose your Bitcoin. That's just the security floor has been raised. And so how do we educate on that? And how do we really usher a bunch of people in the US and abroad into that new world?
Very well said, especially versus the 21 million supply cap, which I cannot stress enough. And Rick, I'd be curious, especially from the Coinbase side. And then I do want to ask a question around the collaboration between y'all and Bitkey, because I haven't played with this yet. But if it's as easy as like syncing up your account with the Cash App and the Coinbase account to self-custody, I'm going to be chucking Bitkeys in stockings this Christmas.
Yeah, but before you go on, Rick, I would like to set it up a little bit more, because I think you're in a very unique position where, as a publicly traded company that has kind of exposure to the full spectrum of, okay, we need to provide institutional grade custody, and there is still that regulatory compliance. But at the same time, we're trying to maintain the ethos of Bitcoin in personal sovereignty and offering things like Coinbase Wallet. I'd be curious if you could kind of lay out that spectrum and how you're thinking about kind of navigating the markets and some of that delicate balance between the two. Be really interesting.
Oh, so the source of my insanity. Balancing all of that. So just I can't work at Coinbase and not acknowledge Kathy's original point about the challenges in Nigeria and property rights. Yeah, as a firm whose mission is to promote financial freedom, there's no better case study to succinctly put it that way as to if more people in Nigeria had owned 10% of their assets in Bitcoin, how different their lives would be today than they are. And I think that underscores the mission of all of us here on this call. And I think that's quite an important point. I was going to take NBK's example of sort of, people storming the castle in medieval days and take it to Bernie Madoff, because I have my TradFi hat on. And that's the castle that I try and protect, which is institutional assets from that. And that's what Bitcoin does and what public ledgers do. A fun story, when I was bringing one ETF provider sort of along on the journey, and I was taking their ops team through, what is Bitcoin? How does the system work? How does our platform work? And I was going, well, accessibility, it's 24/7. It's awesome. They're like, but wait a second, end of day, it stops at 4 o'clock or 5 o'clock. Like, And like, no, it doesn't. Like, no, but like their minds are melting. What if it runs? What if there's a trades after 6 p.m.? What do we do? And then they're like, oh, but it stops on weekends. No, they're crying. There's literally melting down. And I show them reports, and they're like, "Oh, well, at least we can give these reports to our fund administrator." I'm like, "No, you can fire."
You live in my meme world now, right?
Like, you can fire your fund admin. Like, what do they have to do? It's on chain, and they're like, "Oh, that's happy news." So like, the mindset is very different, but that transparency actually protects people's assets, protects institutional assets. I work at CCTC. We are a trust company. We are a fiduciary. And to some people watching this, that might not resonate fully, but to institutional clients, that means something very specific. So my number one goal is their protection. They come before my own profits. They come before everything else that I do for this trust company. And I think that puts us in an interesting position. We're here to protect our clients' assets. That's within our trust company. Now, as Coinbase, to Yassine's question, we offer a range of services. Different things for different people. Some people self-custody, some people non-custody, some people full-blown custody, including within a qualified custodian. So there's this range of protections people have, and they're to achieve the transparency and the accessibility that we offer. There are trade-offs in the level of cost, and to the extent you implement security on your own side, or whether you sort of offload that to a third party like a Coinbase. And I think, or any of us here on this call. So I think that's really the challenge out to the end consumer is, what is the right fit for them? How do they pick amongst the services? And I think our challenge is really, I think we get nerded up on the complexity. And I think that's not to our credit in the longer run. I think we need to simplify to gain access and to help bring people in and to make the right choices, because they're obviously, there's some dangerous choices out there that are being presented to people.
Rick, can you elaborate a little bit on that difference between the trust company and the Coinbase entity, and how that separation is to the benefit of the consumer in a lot of ways? I think a lot of people kind of underappreciate that distinction. What's the impact as it pertains to, let's say, asset ownership?
So as a qualified custodian, it's your assets. We're holding the keys, and so we're using our security. We have a rather significant portion of capital within the trust company to capitalize it per our regulator, the New York Department of Financial Services, with whom we engage very actively. So we have a capitalized entity. We have wind down costs embedded in that entity. And there's this concept in traditional finance of bankruptcy remoteness. If something were to happen, unfortunately, to either the parent company, an associated entity, or to CCTC itself, we've ensured that these client assets will remain available to them, and we have no rights to those assets or to misuse them, sort of, as I mentioned earlier, Madoff style. So that idea of bankruptcy remoteness and protection of client assets is a good feature of TradFi that we've imported and leveraged to our clients' benefit here in this space. And as we look, there are a lot of clients like the ETF providers and other sort of the larger world of RIAs who are restricted to only keeping assets within a qualified custodian. And that narrows down the list of assets that they can access, as well as the number of venues where they can hold those assets. And it makes for a very interesting world, which doesn't necessarily apply to everyone, but it does open up, obviously, the spigot of resources to flood into the market, as we've seen over the past quarter.
That's really helpful. I think this kind of reinforces the idea of the spectrum of optionality that Bitcoin provides, right? We started with NVK, where you can, in theory, just hold 12 words in your head and transport wealth across space and time with those 12 words. Or you have, the other side, which is that institutional grade, custodian, where if you're, let's say you're an ETF issuer, it's like you're, as an advisor, you're not going to be the one, storing the 12 words in your head. There's also a lot in between, which I think, Max and Tyler, around just collaborative custody, multisig, for both kind of the retail side of things, because, as a retail investor, if you want to have full ownership of your wealth, there is a risk if you lose your memory that you will lose your assets. And so the idea is that, I think maybe we can touch a little bit on, the concept of multisig in Bitcoin and why that's kind of such a novel idea. Max or Tyler, whoever wants to start on that, because you guys are tackling different problems, but kind of the same solution.
Yeah, I'd love to jump in. This is something we're really focused on with BitKey. So BitKey has three components. There's a mobile app, which is the main interface that you use to interact with the wallet, a secure hardware device, which I'll try to put up close enough to the camera, and then block servers. And what we've done is leverage multisig. So at a Bitcoin protocol level, use 3 keys instead of 1. 2 keys are required to move money, and we put 1 key in each of those entities. 1 in the phone, 1 in the secure hardware device, and 1 held by block on behalf of customers to help them in case they lose parts of their wallet. And the idea behind this is that customers have 2 keys in their hands, 1 in the phone and 1 in the hardware. They can move money without block. But if they lose one of those components, block can help them recover. And what multisig is basically a great tool for us to leverage underneath the hood here to focus on what's really most important to us up front, which is helping people avoid accidental loss. So one of the sharpest edges with self-custody, of course, things getting stolen is a consideration, but right up front is losing it accidentally. And we've tried really hard to make sure that folks don't need to remember long passwords or be burdened with, storing a seed phrase that they can't let anybody see and they need to make sure that they have access to forever. And this has been a big focus for us in trying to make self-custody a realistic option for a broad audience.
Because it's important to emphasize this still enables sovereignty, where in theory, block only owning, call it 1 of the 3, doesn't have any full call it executive discretion over the assets. Can you elaborate a little bit on that, like what that recovery process looks like and why block is, an important, call it fractional counterparty almost in this process?
Yeah. So what we've tried to do is reduce as much as possible the reliance that people need to have on block while optimizing upfront for making sure people don't lose their funds. And the way this works, we have a couple of different recovery features that we're using to do this. One is an encrypted cloud backup. So because we have both a phone and a secure hardware device in the picture, we can back up information to the cloud that's encrypted with your hardware. And that way, in the super common case where you maybe lose your phone or even just get a new one, you can download the app on your new device, tap to your hardware, and get set back up. And it's as simple as that. You don't even need block's backend key. And then for situations where you've lost the hardware or maybe don't have access to the encrypted backup for whatever reason, we have a feature that we call trusted contacts. And this is actually for even if you lose both of your devices. And what we do is we allow you to select trusted contacts, not block, but folks that you trust that will decide if it's you during this process. And they basically store a component of the mobile key for you. And, so I could enroll NVK, for example, if he downloads the BitKey app and accepts my invite, and basically call on him when I lost my phone and my hardware. And basically NVK would decide if it's me and decide to authorize the request. At that point, I'd get back to having one of the keys that I lost and block has the other. And then we have a process that involves some delays in communication to make sure we're trying to reach the rightful owner of the coins before block essentially coasts the transaction.
May I ask a question, Max? Is this, how widely distributed is this? Is it U.S. focused now, or are you going global right away with it?
One of the things we're really excited about is that BitKey is available in more than 90 countries today.
Wow!
2 weeks ago, and really excited about this. And I think everybody on the call was highlighting up front some of the powers of self-custody. And really the reason behind this is that self-custody and Bitcoin are at the foundation. It's one of the things we're really excited about. Traditional finance is full of borders and gates and things that prevent great financial tools from getting to everybody. And Bitcoin and self-custody make this possible. So we're really excited about the breadth of that.
Yeah, I would not understate that. I think Bitcoin is so elegant in its ability to kind of circumvent local authority and regulation, where you really just need a hardware wallet and a phone to own Bitcoin. And you can very easily roll that out internationally. So that's really, really awesome to hear that.
actually, I remember, Max, when your company was named Square, it was trying to penetrate markets, foreign markets, and it was just blocked. It was, it was painful. So the fact that was not that long ago, the fact that you can tell me 90, did you say 90 countries? That's amazing. That's beautiful.
I'll jump to Tyler in a second, but I actually wanted to ask Rob, because we're talking about collaborative custody and native multisig. Bitcoin, you mentioned at the beginning of the intros, Bitcoin native smart contracts, and now being the mini script king that you are. Maybe you can elaborate on some of the new technology, or not even new technology, but different ways.
Absolutely, yeah. Just to set the stage, as Bitcoin's being financialized, and I think something that's very much not discussed, it's often talked about as digital gold, which it absolutely is, and all of the monetary properties around it. But Bitcoin is also programmable money, right? And we talk about this with an idea of a multisig. You can't multisig a bar of gold. You can't multisig stock shares, right? You have the ability to have the money being secured by code, allows a very robust tool set which is being explored. An example of this is the Lightning Network for payments. You can do more advanced smart contracts. Another example, Rod, you mentioned Miniscript, without getting too in the technical details, just allows you to do more robust custody arrangements. So you can, for example, have a multisig of multisigs, where you can have myself have a 2 of 3, and then maybe another company have a 2 of 3. So you can actually do internal compliance and governance in how the keys are distributed in a way where you can have each organization have a quorum of keys. Additionally, you can enable time locks, a very interesting property about Bitcoin as a network. It's a decentralized clock. All of the miners, when they find a new block, put a timestamp on what the current time is. And since you have time now as a concept, you can introduce things like time-based security, where a very simple example is you can have a 2 of 3, and if the money hasn't moved in a year, you can make it a 1 of 3, right? What we're doing at Anchor Watch is for the length of your insurance policy, we're required as a co-signer. But at the end of the insurance policy, if we are no longer holding risk, we can let you unilaterally just take the money again, which is a different arrangement than working with a counterparty where you're saying, I want to terminate my contract, send me back my Bitcoin. We're able to encode this today in Bitcoin without changing any of the network in a way that allows for this like seamless transition and handoff of assets. It's also a really powerful concept for estate planning, inheritance, right? More advanced financial contracts and derivatives. There are a lot of like robust tools. And this is because Bitcoin, the code is money. Like the word, like your 12 words, your private key is the money. And you can use Bitcoin's programming language to do these more advanced custody arrangements. So it's a very open design space for all of these different ways you can secure and upgrade your Bitcoin, whether that's collaborative custody, multisigs, time locks. It's a very robust thing. I think over the coming years is going to be integrated more into Bitcoin with financial offerings. It just foundationally makes sense that we should be utilizing everything in the toolkit for more robust security and availability of funds.
Yeah, I just kind of wanted to go off of Max's point. I like to look at, there's a spectrum I like to look at, and it's, technically sovereign and being technically sovereign, but then also being practically sovereign, right? A lot of folks might be technically sovereign and the fact that they set up, 12 words or even a multisig with a collaborative custodian, but practically sovereign. Do they know what those 12 words, the importance of them and what they mean, right? So they're not going to go put their seed words in a password manager. Do they know those recovery options that Max was touching on, right? What are the worst case scenarios if your collaborator goes down? What can you do in those situations? So balancing that, right, making sure folks feel practically sovereign as well as technically sovereign, that's a really, really big goal for us at Unchained. Something that's really interesting, and this goes to the grandma question, right? Is like it's pretty commonplace now. It's like, can my grandma custody Bitcoin? And I think that question could really be flipped around and say, it's like, does grandma have to give up control of her Bitcoin to one single entity? And the answer is no. And so how do we get grandma to be practically sovereign? Well, we want to meet her where she's at. Still, while reducing our single points of failure and eliminating them. So collaborative custody, it's kind of often thought of as like your collaborative custodian holds one key and then you as the user holds 2 keys. That's what I do, day in and day out with individuals and businesses. But as we look forward into the future and where we can take collaborative custody, something that's really interesting is, the concept of key agents and delegated setups for your collaborative custody, such that maybe if I am a business and I want to hold, billions of dollars worth of Bitcoin in my treasury, well, maybe it's not me setting up two hardware wallets in a room in my office. Maybe it is structured such that there is these institutional key agents that are making up my multisig. That's a pretty interesting idea, and it takes one single entity out of the equation for being a single point of failure. Exploring those ideas and kind of what our co-founder Drew Bonsall talks about as the network of keys is really, really interesting. And that goes for large institutions all the way down to my brother. I hold a key for my brother in a multisig. I am his key agent, right? How do we think about a network of keys and ultimately bolstering that network such that, hey, any individual key agent or provider can go down. There's that doomsday scenario, but at the end of the day, the impact surface is as minimized as possible. Touched on a lot there, but just wanted to kind of get that out going off of Max's point too.
By the way, is that the brother that's going to be an MLB star?
It is. Hopefully. Got to go support him in his minor league games this summer, but that's the plan.
Rock and roll, man. That's awesome. Good little brother. Yeah. Or big brother, excuse me.
He physically bigger brother, age-wise younger brother. So
that's awesome.
Sorry, NBK, did you have anything to say to that?
Oh,
yeah.
No, I think I was just going to enforce that. You do need to have like a lot of different solutions in the market, and for a long time, what happened was you had a bunch of hardware wallet companies sort of competing in this specific experience, where you get your seed and you put in a piece of metal, which is an absolute superpower, right? It's vendor agnostic, it's cross time, it is true sovereignship, right? But it is challenging for some folks. So what we're seeing now in the market is, and it's funny because we play in all of these because Unchained, Casa, all these guys use Nunchuck. They all use our products as well, so they use it differently, and we're trying to sort of understand where this is going, because there's also the fee dynamic that a lot of people are ignoring with the multisig. I don't want to dive too deep in the rabbit hole, but the market that you see today for Bitcoin UTXO ownership is going to be very different in 5 years from now. An average person in Africa is not going to own like a UTXO in Bitcoin main chain, because it's just the math doesn't work out. They're going to have Lightning. They're going to have other sort of whatever we come up with. It may be eCash tokens, whatever it is. But the point is, I feel like a lot of the solutions and what people are working on is to focus on today, because we are sort of trying to help everybody sort of take custody of their Bitcoin or get off the ETFs and maybe move to this or go back to the ETFs, whatever. However you get off inflation, just get off inflation, right? But it's just this idea of I feel like these new solutions like Nunchuck, BitKey, some of the stuff that we were doing with Tap Signer is really sort of trying to figure out what can we offer in 2 to 5 years from now to a market with a new fee environment, because it will matter.
And just to jump in, and at the risk of sounding like I'm plugging something, but I'm going to plug something. So we recently, on our institutional side, launched our Prime Web3 wallet. So this is an institutional grade, non-custodial wallet. It's a one of two format using MPC. We are not custodians, so clients can do with it what they will. We do cosign transactions, so it is secure. If they lose their key, we are able to help them reconstitute it. We also give them the full ability to export their keys and go full custodial on it. So what's interesting about this is we pull this into our institutional platform as a full first-class citizen. So you run reports, you look at your positions, look at your balances, you look at your whitelist stability to do transfers. It's like any other account, any other vault you have within our ecosystem. And this goes to the role of what are clients' tastes, but also this was my point about not everything fits within a qualified custodian. So if there's certain assets, be they securities or other things that aren't yet within a QC framework, this is something that institutional clients can use. So a lot of people think of a BitKey or something like that as something that's a killer solution for a certain class of individual. But there's the institutional need as well, which sort of spans that space. And there are interesting solutions like this that are filling that void.
So NVK, you mentioned fees. And so I'd love to learn a little bit more about the various fee structures out there, because clearly that's going to be important over time, as you say.
Sure. I'm happy to touch on this. We're just going to need 2 to 20 hours. No, I'll try to be very quick. The rabbit holes on Bitcoin are endless. So what happens in Bitcoin is that the block fees, right, the transaction fees in Bitcoin are priced in Bitcoin terms, right? They're not USD denominated. So what you're paying for is bytes, so a size of a transaction in terms of weight, not in terms of economic value. Okay, so that really turns things on its head as Bitcoin price goes up, and also as the volume of adoption, so amount of people who are competing for the Dutch auction on the block space, right? Because that's kind of what it is. It's a Dutch auction. So what happens is, as more people come in, more people are on a block, more it costs to make a transaction on Bitcoin, right? So the way I'm sort of like starting to change my framework to look into 5-10 years out is Bitcoin becomes more like BIS, right? So you're using Bitcoin to make, a $1 million minimum transaction kind of thing, because that's, aside from old UTXOs, I'm talking about the new people coming in with smaller UTXOs. It's going to cost a lot to make the transaction if the blocks are that busy. Right, and then on layer 2s like Lightning and things like that, that's more like Swift, right? So it would be a wire equivalent, right? So like it's from your 10,000s to $1 million or whatever. Like like it's not, you're not asking for counterparty sort of insurance on a transaction of $100 million or something like that, right? And then on top of that, maybe you have your eCash, you have your ARCs, you have whatever. Like that's still being worked out because it's so early. But essentially, it's just this idea that now for you to own that UTXO, those say 10 million sats, right? So 0.1 Bitcoin. For you to own that, you have to have enough economic value and capacity for that to be transferred on an extremely expensive, slow, 10-minute interval system, right? So that's going to change a lot on how the global south sort of like play around this stuff, right? So you can have shared UTXOs. You're going to have other means of that to be transferable because it will be so expensive to transfer that.
In many ways, it points to the value of, call it, block space at Bitcoin's base layer, right? Where in theory, what NVK is trying to is saying is that, I think, and this is a very underappreciated point of, you're paying the sats per byte. Is that in theory, you're sending $2 of Bitcoin is the same transaction fee as if you were to send $2 billion worth of Bitcoin.
I like to say that there's not enough UTXOs for everybody.
Yeah.
Okay. So Bitcoin is even more scarce than people think, right? So in the world right now, like you have what, say, 1 basis point of the world population owns probably like half the world's wealth, right? So with Bitcoin and less continuary effect, maybe we can, have, say, 1% of the world population own 50% of the wealth. That's 100x improvement in human sort of distribution of wealth, right? It's still sort of like, 50% of the Bitcoin could be owned by 1% of the people, right? So once you start, even though there's 2 quadrillion sats, it's still not enough to distribute to everybody because wealth is not, equally distributed. So when you really start to play around with those distributions, right, there simply really isn't enough Bitcoin for everybody. It kind of gets crazy because we don't have credit system, right? It's not an IOU system. It's not. It's a complete inverse of that coin.
NVK, you mean Bitcoin for everybody to interact with at the base layer, right? That's I think that's the, and I think that's where the Cash Apps and the Coinbases of the world, I think, are helping in many ways, where they're kind of creating a consolidated entry or accounting book, and improving on the UI a lot. Where it's like, if I have I'm opening up my Cash App or my Coinbase wallet, you can do the Cash App ID, you can send Coinbase ID, and effectively you could send that feeless, and call it a fraction of the cost and at a fraction of the time. But there is that trade-off of you're not actually interacting or interfacing with the base layer.
Yeah, Lightning pretty much works like that, right? You're sharing some UTXOs at the same time, right? It's very similar to how like Visa clears between Visa and MasterCard, right? Like you're not like going back to the bank to clear fully. You still have some credit between each other, right? And that's how you find efficiencies, right? So for since we don't need so much of these institutional solutions for retail anymore, as the world sort of moves on to a Bitcoin standard, you still need to find those efficiencies somewhere, right? Those will be programmatic, right? That's what you use some eCash or something to some of the stuff that you were addressing.
And I think that your point here is also that the search for those efficiencies we've kind of neglected because the price of Bitcoin was only $70,000. But as it goes up, the cost of postage goes up dramatically. And it's something we have to become increasingly more attuned to.
And that we should be encouraging that, because in many ways, that's what pays for security. So to think about Bitcoin at the base layer as this kind of high fidelity settlement layer for high value transactions is effectively exactly what we should be encouraging. And then on the flip side of that, to your point, NVK, encouraging all of the applications that are built on top to sort of facilitate more of the day-to-day ownership, call it. So, very interesting dynamics.
When you outsource ownership, right, you also outsource risk, and that makes your product deployment cheaper. So it's in everybody's interest to outsource the risk, right, in this space. And this has never been, because that's what the value add of a bank for retail has, right? I mean, let's ignore the fact that they're loaning out your money and they have no money inside them. In a traditional 1800s Lombard Street bank, right, you were essentially paying them to hold your money, right? So you are outsourcing your risk to them. What Bitcoin allows is for you to take back that risk, right, but much more de-risked, because you can do multisig and all these things, and then that the cost of that value add is much lower, so they can offer the value add for cheaper, right? So Coinbase, doing you guys are probably holding part of Sailor's coins, right? And the cost of that risk it's greatly diminished because you can probably have other partners, co-signing that. Where insuring something that is this soluble, this fungible, way back then, like say, a room full of gold, it would be way higher, right? Because you have to build a little Fort Knox around it. So it's just like this whole, the cost is lower and the incentives are really pushing back for this sort of like more sovereignship as a feature, not as a bug.
We touched a little bit on regulation. And I'd love to maybe circle back a little bit on that, kind of some of the, regulatory and compliance challenges that these custody providers are facing, and even that balance between even self-custody. Let's say in, like France, they want to ban self-custody, or in the EU, there's this whole travel rule. I'd be curious if anyone has any thoughts on kind of the evolving regulatory landscape, and maybe we can segment that between the self-custody landscape and then kind of the institutional grade landscape. So whoever wants to take the first stab at whichever one, I'd love people's thoughts here.
Regulation, should we just do it?
Let's do it.
I think regulation's moving along. I think the G20 countries and a lot of the big financial hubs are making material progress. The U.S., I would say, feels like it's lagging a bit, but it's trying to get ahead, and we sort of are cautiously optimistic. We're obviously very proactive and encouraging. We have a lot of time with Brian and members of the leadership team down in D.C. And I personally engage a lot with our regulators in a positive sense. They are our partners in the future. It's just you can fight that and you will lose every time. So how do you make the most of that partnership? So I think that, what we're looking for, obviously, as we've been very public on, are sort of clarity, because clarity, whether you like it or not, is better than something that is opaque and you only know it when you step on a landmine and you get sued. So we're looking for that clarity, both domestically and internationally. But I think, certain elements of regulation are out of fear of change and what this means. I think certain things are just trying to lock down people that are otherwise be dodging taxes. And I think that, you live in a country, you should pay your taxes in the country or move. So I know that's not the most libertarian forward statement, but I think it's a choice. And I don't think regulation is going to suddenly stop. So I think for us to move forward, we have to go forward with it. It's a challenge. And, my wife was a regulator. She worked for the New York Fed once upon a time. They have a hard job. And, we here have a tough time keeping up with our own industry. Imagine being at a regulator, having to keep up with regulations and this industry. It's quite challenging. So I think we need to help the regulators help us. And I think that's sort of what we're driving towards. But it's going to be a headwind for a while.
Yeah, I just want to say a ton of respect for the work that you guys do in that space. It's a really, really hard set of activities, and obviously something we take really seriously at Block as well. And frankly, in self-custody world, we're quite lucky that, generally speaking, these are regulated as hardware and software tools and aren't subject to lots of the things that you're mentioning and highlighting. And it's actually one of the reasons, like we from a BitKey perspective, we really want to make sure that, safe, compliant exchanges exist and are there, because we don't live in a world today where people can go buy groceries in Bitcoin. Like, they need to use local currencies. They need to move back and forth between fiat and Bitcoin. And it's actually one of the reasons that led us to go partner with exchanges, both you guys, Coinbase and Cash App as well. And we're really excited about making that link really, really easy for folks, so that you can just go right into the BitKey app and buy, sell, transfer Bitcoin to and from exchanges that have done all that hard work in your region.
Yeah, I mean, the risk and the value is really moving to the edges, right? Because of self-custody. And governments have a really hard time dealing with the edges. On the institutional side, I mean, it's fairly easy to capture, regulate, however you want a political spectrum you want to look at that from. And in your ETFs, they're not Bitcoin, right? You're just a claim on a share of a trust, which is great. But what's kind of fascinating here is you can't really realistically regulate the edges, right? And look at how the world drugs and all that stuff is going. It's hopeless, right? And we don't want to be fighting the government in the country you live in either. Like, it's not a realistic way of living. But what happens is when the value of that custody, the economical value of the custody, is slower, smaller at the edges, is that it's no longer economically viable to regulate either, right? Like, we're gonna be in a very weird space of selective enforcement in the coming years. But how do you prevent people from holding their $10,000 of savings in their hardware wallet? It's like you can't realistically do that in the West, right? I mean, maybe in some places in Europe, but it's still so hopeless. And then as this thing expands into layer 3s with eCash tokens and 1 million mints, each holding 50 cents each, I really don't have a framework in which a realistic government that's not trying to just go full stupid like a dictatorship or something, finds a path of regulation for your $10,000 wallet.
Stupid versus just partial stupid. Yeah.
Yeah, I think,
exactly. Right.
I mean, you're bringing out this bifurcation of the market, because I think if and I know Tyler, your colleague Trey Sellers calls it hillbilly Bitcoin and cosmopolitan Bitcoin, right? So you have this bifurcation in the market, and you have to view it through the sense of the value that Bitcoin has from institutional investors is that it's this permissionless, rock solid monetary foundation that anyone can freely interact and transact with. And you still want to have, in the sense of counterparty risk, like today, Sam Bankman-Fried just got sentenced 25 years, right? There are people who exploit kind of trust and gaps in being able to have insight. And so there is a role for regulated financial products like an ETF, that you're going to want to have some sort of assurances and insurance to be able to understand that this will actually exist. And if you were to encroach too far on the permissionless nature of the network, it's almost killing the goose that lays the golden egg. Right. So you need to have this balance of within a bifurcation of the market, you're going to have people who are freely at the edges of the network, self-sovereign, using and managing Bitcoin, using it however they wish. And then within an aggregation, I view an exchange like a Coinbase or a Cash App or an ETF, like those are actually a sense of a layer two. They may not be a technical layer two, but they're a very powerful way to kind of aggregate these transactions where I can within an exchange send money to someone else. And since it's just an update and a database entry, I don't have to pay that on-chain fee, which is prohibitively expensive, right? So it's a way of aggregating and batching things. So there's synergies where you want those environments where you're a fiduciary managing other people's money to have controls and logic in place to make sure that you're doing right by your customers. But you also don't want to instill that at the protocol level of Bitcoin. Because if you were to do that, then Bitcoin as a monetary network starts to lose its meaning if you have to go and get an act of Congress to be able to send your Bitcoin. Right? Like then all of a sudden the value proposition that people seek in this network will start dissipating. So you have to kind of respectfully balance, if you're in a regulated financial institution, having those checks and balances, but not actually messing with the underlying free network.
I mean, flag theory is really sort of coming into play now in a way that never before had, right? I mean, you have, how many millionaires do we have in the world? Like, I think it was something like 20 million or 40 million millionaires or something like that. It was not a very big number. And, you can look at now digital nomads where, these people probably have like, say, $1 million in savings. They all have it in Bitcoin or some other form of crypto. And they're simply packing up and leaving. They're not doing exit tax. They're not doing anything else. They're just leaving. These are young people. They don't care. They don't even understand that there is like a consequence to living your tax residency, right? And they're fully functional, right? They arrive in a country where they can just convert to pay for things. And how do you deal with this, right? Like I don't think you can anymore. And countries are competing for this. Portugal is offering, your tax whatever, and every country now that is not stupid, it's starting to offer like some sweet deal for please come here. Dubai is just tripling down on this now, and we're gonna see a lot of final like competition at a state actor level. It's not just that you're gonna have like a nice Starbucks and not get mugged or killed between that walk of one block. Now you can also like have, what is your serious tax advantage of being here?
What is the most generous, and how are they doing this?
So you can look at like just in general terms, right? Not even Bitcoin related. Like you have your traditional, and I'm not talking about tax sheltering in the Caribbean, right? Like this is not that kind of stuff. It's just more like, please move to Portugal. You don't have to pay cap gains on your Bitcoin sold for the next, I don't know how many years, right? And then you have Dubai, I think it's 30 years of deference. And then, yes, and like, I know at least 300 people, and I'm not exaggerating, who have moved to Dubai.
Oh, Dubai,
like,
wow.
Packed and moved. No, I'm not even talking about the other countries. It's like people are literally just like one shot going. They're not even selling their houses in the other place. They're just going. And this is happening through also Central America, like Portugal, Costa Rica is tax-free, no cap gains. El Salvador, you have Paraguay. It's going to happen everywhere, right? Because see, before you had to, use PNG or somebody to set up your sheltering in, say, some island in the Caribbean is paying the ass, a lot of money, costs like to maintain that. People still do it, but now you just literally move. And it's becoming complicated and unenforceable, right? And so countries are going to have to like meet in the middle, and I think that's going to be the interesting part. It's that meet in the middle. Like, where do you find where you don't put people at like they're not doing something illegal, but it's also enforceable? I think that's the next 5 years, like legislation wise. How do you handle that?
So with about the 10 minutes we have left, I think I want to expand on that, NVK, and just imagine the next 10 to 20 years for the entire group here, including Kathy and Yassine as well. Like, what does Bitcoin custody look like? NVK, you touched on people just throwing the backpack on and rolling, out of their home and into a better place to raise a family, build a business and such. I'm curious from everybody's perspective, what does the future look like from a Bitcoin custody perspective?
it's bright. I mean, like everybody now has like there's 50 companies, 100 different products, and different kinds of trade-offs of ways for you to like stick all your money in something, right? And find yourself what a better life looks like to you, right? That may be taxes mixed, that might be just the weather, it may be just more personal security in the country you live in, but you have property rights, right? And enforceable property rights with mobility. So it's hard not to be like extremely optimist for the next 10 years.
And maybe I'll come back to a point that MBK brought up earlier, where you were talking about competition in the industry. And, I think we're at a really special point right now where we actually just need more solutions. We need more solutions across the spectrum from everybody in this room, experimentation with different technologies to get at things like the fee issue that we talked about earlier. And I think that experimentation, hopefully, will lead to a world where people start with a wallet. They probably start with self-custody and may not even know that that's what's happening. The default is more to put people in control, but to have really, really good connectivity to give that optionality. We talked more about, we talked about Coinbase and L2s providing different properties, and that some people might use those in a custodial way. And we don't see a world where it's really all one or the other. And I think really what we're after is that the default is putting people in control so that people have more access and independence in what we hope is an increasingly open economy.
I think the question itself is actually quite interesting. Where will the digital asset space be in 10 years, let alone custody? A Bitcoin year is at least 10 TradFi years. So you're asking like, what will, it's like being in 1924 and saying, what will finance look like in 2024? No computers, no such thing as like electronic trading, let alone digital assets. So us flashing forward 100 years is quite hard. But will digital assets be a thing, or will it just be assets? I think as real world assets, you get tokenized, hit blockchain, securities come online. I think, in my kids' generation, there won't be any sense of, any distinction or differentiation, which I think just sort of speaks to the scale that we'll have to embrace as I'm thinking, with my own hat on as an institutional custodian. But I think that, the experience we will have to bring all these people on that journey, to Max's point, we'll need a plethora of solutions, different things to fit different people, but we'll have to scale massively. We'll have to solve some of our complexity. And I think that, we need to make this the domain, not just of sort of techies or people with hoodies, but just like the example of the DGen grandma. She needs to be able to, whether she self-custodies or not, it has to just be fine. It has to be a non-issue. As long as it's something we talk about on these shows, it's a problem. When we stop talking about it, then we've solved it. And I think those are sort of the hallmarks of success. But I think that fog that we all are working in, all of us here are working frantically trying to solve things. But we're in this fog of war. Like, we don't know what's going to happen over the next 10 years for sure. But that fog comes in, and it's interesting space in which we're operating, that there's this level of uncertainty. And I think that sort of speaks a lot to Max's point about needing a lot of solutions.
There's a really technical grandma out there in a hooded sweatshirt who is listening to this right now going, what the heck is happening? These guys are talking about me. No, I like that. So just the optimism that MVK pointed out, and Max as well, and Rick, you echoed this. It's like, I think more competition enforces better solutions over time. MVK is doing this with the cold card queue, like, looks awesome. It's making Unchained think about, okay, how do we bring a mobile first custody experience to our clients with awesome things like NFC or air gapped QR code, public key import, and all those technical things that seem technical once you get inside of them. But to the user, we need to make it feel like magic. And I think more competition is going to help with that. More education around these esoteric things like fees and UTXOs. That's really what's going to get the ball moving at the end of the day. But I do like the optimistic take. Like, sit here, Bitcoin $71,000. We get to all talk about these awesome things that are developing. It's just a pretty special thing to be a part of.
Yeah, I'd echo what everyone said here. I think the more competition, more education, and I think a better understanding and clarity over the trade-offs of these different solutions. I think today the state of custody is one where it's like either the framing of this is a one size fits all or this is better than that. When in reality, I think the more understanding kind of you have on about the spectrum around how to custody Bitcoin, I think the better off you become in making the right decisions. I also like Max's framing of, like personal sovereignty first or personal sovereignty by default. I think that only comes when there is an understanding of those trade-offs. Because, the grandma, there might be that grandma in the hoodie, but I can tell you my grandma is not, she's not going to be the one self-custodying her Bitcoin. So just a better understanding of trade-offs, which comes with more education. And indeed, the future is bright.
We're in the very early stages of the castle conversation at the beginning. We have thousands of years of understanding physical custody, and we're just learning how to deal with Bitcoin and this digital security and that digital information being the money. That we're in the very early stages and talking about regulatory climates in 10 years. Like Staff Accounting Bulletin 121 probably being repealed. So U.S. federally chartered banks being able to start getting exposure to custodying. I take a very optimistic take that there's just going to be more financial institutions and players who are going to be able to, play in this space, being able to help service end customers. And this is going to kind of be part of that distribution of risk, as many institutions, a lot more people being comfortable handling keys as best practices are figured out. And it's just going to get ingrained in the financial system to a point where it's all abstracted away, and you as the end customer may not even have to understand all these complexities. I think because we're the first movers and we're in the pioneering stage of Bitcoin being financialized, we're the ones laying out the bear traps and understanding how it all works. But I'm very optimistic that this becomes seamlessly integrated finance for those who are looking for that. And you'll always still have that option to be a mountain man in your bunker with your Bitcoin as well. But there's going to be a full distribution of availability for anyone, depending on what your risk appetite is and what you're looking for in a service.
The surprise to me from this was, we are talking about scale. We understand this is scale exercise. And yet BitKey is in 90 countries already. I mean, Yassine, if I'm not mistaken, you just got your BitKey. Am I right on that? Something like that. And you got early access, if I'm not mistaken, but it's in 90 countries already. So, it's very interesting to me. And the other thing, to add maybe the complexity and optimism and so forth is, we're very focused at ARC on the convergence among different technologies. And our second Bitcoin Brainstorm was the convergence between Bitcoin and artificial intelligence, especially in the emerging markets. And, I was gobsmacked by what's already happening in the emerging markets. So, I think we have a first world take on this, whereas the hunger and need, a desperate need for this in the emerging markets is the reason it's already scaling, right?
Very well said. And I think that's a perfect way to end this Bitcoin Brainstorm. I can't thank all of y'all so much. This was incredible.
ARC believes that the information presented is accurate and was obtained from sources that ARC believes to be reliable. However, ARC does not guarantee the accuracy or completeness of any information, and such information may be subject to change without notice from ARC. Historical results are not indications of future results. Certain of the statements contained in this podcast may be statements of future expectations and other forward-looking statements that are based on ARC's current views and assumptions and involve known and unknown risks and uncertainties that could cause actual results, performance, or events to differ materially from those expressed or implied in such statements.